We are just waiting for the governor. 2 minutes and we'll be on. Thank you. Please hold on till that time. And for you guys, you know that's the thing now. So please wait for the mic to come. Switch on. Whoever is sitting at the desk, and announce your name and then ask your question. We'll start now. Governor is here, right? Morning, sir.
Thank you. Morning. Morning.
Again, good morning to all of you. Governor is here along with the four deputy governors and Executive Director Dr. Patra and Mr. Mahalingam. We will start with the governor.
Thank you, Alpana. Let me read out some of the rationale for the policy today. We cut the repo rate by 25 basis points and the associated rates by the appropriate amount. Banks have started passing through some of the past rate cuts into their lending rates. Headline inflation has evolved along the projected path. The impact of unseasonal rains has been moderate so far. Administered price increases remain muted, and the timing of normalization of U.S. monetary policy seems to have been pushed back. With low domestic capacity utilization, still mixed indicators of recovery, and subdued investment and credit growth, there is therefore a case for a cut in the policy rate today. However, of the risks to inflation identified in April, three still cloud the picture. First, some forecasters, notably the IMD, predict a below normal southwest monsoon. Astute food management is needed to mitigate possible inflationary effects. Second, crude prices have been firming amidst considerable volatility, and geopolitical risks are ever present. Third, volatility in the external environment could impact inflation. Therefore, a conservative strategy would be to wait, especially for more certainty on both the monsoon outturn as well as the effects of government responses if the monsoon turns out to be weak. With still weak investment and the need to reduce supply constraints over the medium term to stay on the proposed disinflationary path, which is down to 4% in early 2018, we feel a more appropriate stance is to front-load a rate cut today and then wait for data that clarify uncertainty. Meanwhile, banks should pass through the sequence of rate cuts into lending rates. So, I think the policy today I would characterize as neither conservative nor aggressive. It's in some sense a Goldilocks policy, just right given the current situation. In addition, I hope to be able to announce a new set of bank licenses, at least one set of bank licenses by August end. We are undertaking a review of all regulations governing markets to see where there is scope for further liberalization once macroeconomic uncertainty diminishes. We're also doing a deep scrutiny of all our past regulations in general to prepare a greatly simplified list of master circulars. Thank you. Happy to take questions.
Yes. Who do we begin with? Saloni?
Thank you so much, Saloni from Bloomberg TV. Sir, in your last three policies, we had the word accommodative policy stance. It's not mentioned here. Looking at the inflation target that has been revised upwards, do you see that further room for monetary policy easing is very low, considering that from September we will see some base effect also on inflation? And another part, to this question, government, on the other hand, has been putting a lot of responsibility on RBI to prop up growth. Do you think that it's time that some bit of burden is shared with the government to prop up growth?
Well, start with your second question. I don't think the premise is right that the government has been putting the burden on the RBI. The government has been acting on its own to try and reduce bottlenecks, create new pathways for growth. So I wouldn't agree with that part. I think we both play together. As far as the rate cut today goes, it is an attempt to ease the way for further investment to reduce medium-term supply constraints. As far as the first part of the question goes, we have done what we think is appropriate given the data. We have always said we are data contingent. There are possibilities if the monsoon turns out much better than forecast by various forecasting agencies, where there might be more room that emerges, or if the actions by the government are such as to contain the possible inflationary effects. So we've used the room that the data gives us, and our policy will continue to be data contingent. Urjit, would you like to add something there?
No, if I could just say that, although the forecast for early January has been increased to about 6%, it's still a marginal increase, but we have emphasized the risks on both sides.
Lata? You have said that a more appropriate stance, please. Quickly. Sorry, Lata Venkatesh, CNBC TV.
You've said that a more appropriate stance is to front load the rate cut and then wait for data that clarify uncertainty. What is the data you're waiting for? What kind of uncertainty and what action? Also, you have so far maintained that you want a 1.5% to 2% corridor of real interest rates. If the inflation forecast is 6%, then you have already reduced the corridor to 1.25%. Are you willing to reduce it further?
Let's start first with the question of what data we're waiting for. Clearly, the biggest uncertainty at this point is the outturn of the monsoon, but also the policy reaction. As you know, there have been El Ninos in the past with reasonable rainfall, poor rainfall, which has not led to a fall in production, and a fall in production which has not led to inflation. So each path of this sequence is fraught with uncertainty. So we need to figure out how this plays out. And clearly government action is very important, because I think the link between all these has been broken by appropriate government action. So, for example, 2002-2003, there was very weak rain, but you had very limited inflation, partly because of government action. So I think we need to wait and see how all those factors play out. That would be the biggest factor that is on our mind right now. Of course, the pickup in the economy, we think the economy is in recovery, still slow recovery, as evidenced by corporate numbers, but it could pick up faster, or it could pick up slower. That will have an impact on how much room there is to play with. So these are factors that we will be looking for. Of course, there are the oil prices. We believe, as do most forecasters, that there is some upside checks on oil prices, which is shale production, which comes in at $70+. But does this prevent geopolitical shocks from affecting oil prices, and how does that play out over the medium term? OPEC is meeting this week. That will also affect how oil prices move. So there are a considerable number of uncertainties. As I said, we've done what we could given the room that current data allows. In fact, we've sort of erred a little bit on focusing on encouraging investment, given the need to alleviate medium-term supply constraints. Now, going forward, if more room builds up, we will have more room to take action.
No, my point is, as you said, you've erred a little. You've gone down below that 1.5% Lakshman Rekha that you gave yourself. Will you be willing to err further?
No, I think the point we've always made is that we have to be on the disinflationary path that has been set out. So whatever room builds up on the disinflationary path, we will use. But we're not going to move far away from the disinflationary path. That wouldn't make sense, given that we've just building up credibility to stay on that path.
Good morning, Governor. This is Gopika from ET Now. My question is largely on the banking industry and the performance of the banks as we've seen in the fourth quarter. Many believe, or there is a view, that RBI has been behind the curve in fighting the asset quality in the banking system. Looking at the fourth quarter numbers, we've seen there are no reasons to cheer. RBI has been collecting data from banks with regards to their exposure to large borrowers, and bankers and also industry experts believe that RBI is not giving any early warning signals to the banking system to help them fight this asset quality issues. So your comments on this?
Bankers fully know the asset quality issues. They've been sitting on them for a number of years. So they have to deal with them. It's not RBI telling them. They know about the asset quality issues. So I don't think RBI is in fact, what we're doing is unearthing cases where the asset quality issues are being suppressed. What we want is a quick cleanup of balance sheets and a restructuring of situations where assets can be put on track. Nobody gains when the asset is lying without further progress, without new funding to get it restarted, or without fixing all the problems that exist. The government has been taking actions to fix some of the problems. The banks have to take actions to fix other problems. Not recognizing the problem is the worst possible action in these situations. Where we are pushing at this point is to also advise further capital so that the banks can fully recognize the problems and make provisions accordingly. So in that sense, I think problems are known, they have to be dealt with, and often the best way to deal with them is to deal with them now. And that's what we've been pushing the banks. We restructured the whole process of recognizing these bad assets and working with them. That was the Joint Lending Forum process. Wherever there are problems, we are talking to the banks and trying to make the changes that are needed to make that move forward. We have given a number of relaxations where we believe the relaxations will help set the asset back on track. But where the primary purpose is to postpone recognition and not deal with the problem, we have been very reluctant. So when somebody says, don't make me provision for this, we say no. The real problem is when you don't provision or don't recognize it, it comes back to hit you in a much bigger way later. So do it now. That's been our message constantly to the banks.
Yeah, Shobna.
From the Financial Express. So you've revised the growth number downwards and you said that there's a downward bias. Would you like to tell us how much it could be? 25 bips more maybe?
I think that the downward bias carries forward the CSO's own downward forecast for the previous year, that there has been some slowdown, especially when you look at the GVA, the gross value added terms on a quarter-on-quarter basis. Secondly, while there has been some progress, maybe even considerable amount of progress in declogging the investment pipeline, the evidence on the ground is mixed in terms of the actual production, and therefore these kinds of factors have been programmed in for the lower growth. Thirdly, also the issue of how much the banks will be able to fund the extra credit growth going forward. They may not be able to do that immediately, given the capital requirements. So these are the downside risks to that.
How much of a downside do you
Well,
see at this point? I know it's difficult, we don't have, but
It's
given the corporate numbers where profits have fallen for a sample of 2,000 companies by 25%,
I think we've given our best
our
estimate.
chart, yes.
So around that, you can pick any, but the best estimate or the most or the center of the estimate is 7.6.
हाय सर, दिस इज़ अमोल फ्रॉम जी बिजनेस. सर, आज का अगर रेट कट देखें तो टोटल पिछले 5-6 महीने में टोटल 75 बीपीएस पॉइंट हो जाता है, लेकिन अगर बैंकों ने जितना रेट कम किया है विच इज़ नॉट मोर देन 25, अगर बेंचमार्क देखें तो इट्स 15 to 20 बेसिस पॉइंट्स. आपको क्या लगता है 75 के बाद कितना स्कोप बचा है बैंकों के पास रेट कम करने का, और उनके क्या चैलेंजेस से रेट कम नहीं कर पा रहे? एंड द सेकंड थिंग सर आई वुड लाइक टू अंडरस्टैंड इज, सिंस मोस्ट ऑफ द PSU बैंक्स नीड्स कैपिटल, what could be the ways to raise the capital अमलगमेशन की बात हो रही थी, मर्जर की बात हो रही थी, क्या वो एक अच्छा विकल्प हो सकता है?
Let me start with your second question on the capital issue. How much? First, I don't think anybody immediately needs capital for their needs. Going forward, they need capital both to absorb some of the provisions that they may need to make going forward, but also for as the economy picks up to finance the lending to the new projects. So that will be the need for capital. Capital can be raised many ways. One way is issue new shares if you have access to the markets. The other is the big owner, who is the government, putting in more money. A third possibility is reducing dividends in case the bank is not in a very healthy position. Those are all possibilities that need to be considered. Rights issues instead of a targeted issue. Those are all possibilities that need to be thought of. On the first question, 75 basis points so far. You can see the markets. If you look at the commercial paper markets, you look at the CD markets, there you see the effects of the rate cuts. Okay. If I look at bank fixed deposits, which I invest in, because that's the only thing I can invest in, the rate has come down from 9% to 8%, 100 basis point cut in fixed deposits. So over time, this has to be passed through to the lending side. Now, obviously, not all the financing sources for the banks react the same way, and some of them take time to react. One of the things we are working on is this, revising the base rate structure so as to reflect the marginal cost of funds. And we have a framework. We are discussing with the bankers to get their feedback. And soon we will have in position the revised base rate framework. Ideally, we want to migrate to a situation where the benchmark rate of which loans are priced is a market-based benchmark. So that is the medium-term objective. In the middle, we'll work through a marginal cost of funds base rate and go to that in the longer run.
Take a plan there.
Good morning, Governor. This is Nishant from Take a Plan. And I have two questions. Firstly, the current level of foreign exchange reserves at around $350 billion, would that be sufficient to meet any contingency arising out of a Fed rate hike? And secondly, we've also seen some level of competitive devaluation of currencies in some developed countries. Recently, also, the government has pointed out that a weaker rupee will help exports. So what would be your advice to the government in such a case, and how should companies grapple with such a situation?
Again, starting with the second question about weak rupee. Yes, there are some people who want a weaker rupee. There are some people who want a stronger rupee. And I think even within the government, you can find all kinds of opinions. So I don't think there is a fixed opinion. I think going from what you want the rupee to be to whether you can achieve that. So let me finish. Whether you can achieve that, those are two different questions. You may want a particular level for the rupee, but what it takes to achieve that is also another question. We believe that broadly markets find the rate, right? And they will find the appropriate rate for the rupee. Where we sort of move in or intervene is when we find strong flows going in or going out in such a way that we think the rupee departs significantly. There's significant movement. We don't quite know where fundamentals are, but there's significant movement one way or the other, and we believe that is temporary and not likely to be sustained. So to reduce volatility, we intervene in the markets. Now, because there's been substantial flows over the last few months, we have built up a sufficient stock of reserves, to your question of whether we'll be able to withstand volatility. I think the first line of defense, as we say in the statement, is good policy, which I think both the government and the RBI are engaged in. But the second line of defense is strong reserves. I think we have plenty.
प्रदीप पंड्या फ्रॉम CNBC आवाज़. सर, आपने महंगाई के बारे में जो कहा है कि पिछले साल भी और ऑयल सीड में आपने कहा है कि बफर स्टॉक अवेलेबल नहीं है, तो क्या आपके इन्फ्लेशन फोरकास्ट में आपने ये फैक्टर इन किया हुआ है कि अगर 7% बारिश कम होती है या इससे भी ज़्यादा कम होती है तो फूड इन्फ्लेशन कितना बढ़ सकता है? क्या वो सब कुछ अकाउंटेड है?
We have accounted for a increase in food inflation in our forecast, which is why the forecasts have been raised. As far as pulses go, I mean, yes, you can't increase production in the short run, but there is a world market. So imports are possible if prices, and the government is looking at some of these possibilities. So I think food management, whether it's through buffer stocks, whether it's through logistics, whether it's through anti-hoarding sometimes measures, and whether it's through imports. And sometimes through exports if you have excess production. Those are all measures that can help in reducing the inflation. And I think government is looking at all these.
If you allow one more question on transmission that you had just answered. We have been talking to banks और banks का ये कहना है कि उनके cost of fund पिछले पॉलिसी से अब तक 5-7 बेसिस पॉइंट बढ़ गए हैं, ना कि कम हुए हैं. तो क्या आप उम्मीद कर रहे हैं कि अब ट्रांसमिशन होगा, अगर आपको भी यही फीडबैक दिया हो बैंक्स ने?
I will not comment on bank cost of funds. I think I've said enough in the previous policy statement.
Morning, Governor. Gabriel Perusini, Wall Street Journal. Since last Friday, India has become one of the fastest growing large economies in the world. And still, when you look at the RBI policy, you have delivered 3 rate cuts since the beginning of the year. Now, obviously, there is a discrepancy between the official reading of the GDP, as we know, and what you look at to define policy. So, you've given us several hints in the past of what are your favorite indicators. Could you give us an update if there is anything else that you look at or something that you've focused your attention on lately? And also, accessorily, could you give us an idea of what is the potential growth rate in India and if that has changed over the past months? Thank you.
I'll turn it over to Rajit in a second to talk about what his favorite indicators are. It is a sort of discrepancy in the eyes of the world why we still think the economy needs rate cuts when it's growing at 7.5%. Most economies growing at 7.5% are just going gangbusters, and the issue really is to restrain growth rather than to accelerate growth. We still have very weak investment. Investment is still very tepid. We haven't seen a strong pickup. And if you look at the corporate results, of course you have to adjust the corporate results for the fact that inflation has come down quite a bit, and in some of the in specific sectors inflation has come down much more than in other sectors. So you want to adjust for the level of inflation to see what the real growth has been. But in general, the corporate results have been quite weak also, suggesting that final demand is yet to pick up strongly. So those are reasons why we do feel that the economy is still below potential. Output gap is still somewhat negative, and that as these things reverse, of course, then matters will change. There will be, even with the 7.5% growth numbers, there's some discussion of how much that includes special factors in the last quarter, including excise taxes and subsidies. And so when you subtract that, the growth in the last quarter doesn't look as strong as before. And so, you could point to those numbers also suggesting growth is weaker than at least the headline numbers suggest. Ujit, would you like to?
If you look at 2 normal indicators in relation to the question that was asked, using the new series, our potential, by the way, potential output is a level, but if you looked at implied growth rate, it is about 8 to 8.5%. So we are below that at the moment. And the other indicators relate to pricing power and input costs, output costs, etc.
Kavita.
Good morning, Governor. Here. Kavita Krishnan from CNBC आवाज़. सर आपने पॉलिसी स्टेटमेंट जो है वहाँ पर आपने कहा है कि सरकार को जो एग्रीकल्चरल सपोर्ट प्राइसेस है उसमें बढ़ोतरी को किसी तरह लिमिट करने की कोशिश करनी चाहिए. क्या कोई खास कमोडिटीज़ पर आपकी नज़र है जिस वजह से महंगाई बढ़ सकती है?
No, I think it's a statement of fact rather than a suggestion. I think government has to take a view on that based on its own sense. Statement of fact is that there is a strong correlation between increases in minimum support prices and resulting food inflation as well as overall inflation. So that's just pointing out that fact, and that if that price increase is limited, it will help. Now, the broader point on minimum support prices has been that support has focused only on a couple of commodities in a limited area in India. That broader, if it's a form of insurance, broader support across commodities and across India would ensure that the decisions in terms of growing would be made in a more effective way. If you support only a narrow set of commodities, and it's only in a few states, then those states tend to overproduce that commodity, while other states don't get the benefit, and it may be that you're skewing production in a certain way that doesn't respond to price signals. So the broader point is that we need to make this, if it is a form of insurance, which it is, work throughout India and in a reasonable way across commodities.
Pooja Tripathi sir, CNBC आवाज़. Sir, talking about stressed projects, क्या आपको लग रहा है कि सरकार अब उतने कदम उठा चुकी है जिससे कि जो भी stressed रुके हुए projects हैं उनको लेकर अब कुछ revival आपको नजर आ रहा है?
No, I think there have been signs that these stressed projects are coming down if you look at the numbers, but the level of these projects that are stressed is pretty large. So I think this is ongoing work and will take some time to clean up. It's not something that is done overnight, but it has to be steady. And we also have to ensure that once the various permissions, roadblocks have been cleared, credit flows to these projects and they actually start up again. So that second part, it is within our area of responsibility to try and ensure that that happens.
सर वीरेंद्र सिंह गुनावत फ्रॉम आज तक इंडिया टुडे ग्रुप. जिस तरह से पूरे पॉलिसी में कई बातें कंसर्न्स ज़्यादा हैं और अच्छी खबरें कम हैं, एंड ऊपर से आपने शुरुआत के 2 मिनट में ही काफ़ी कुछ कहा है कि मॉनसून को लेकर, क्रूड ऑयल के जियोपॉलिटिकल रिस्क को लेकर आपने ये भी कहा है कि भी स्ट्रॉन्ग फूड पॉलिसी एंड मैनेजमेंट विल बी इंपॉर्टेंट टू हेल्प कीप इन्फ्लेशन. ऐसा लग रहा है कि बहुत ही ब्लंटली सवाल है कि ऐसा लग रहा है कि इस पॉलिसी में कहीं वैसी ज़रूरत नहीं थी कि 25 बेसिस पॉइंट की कटौती करनी चाहिए, या फिर आपको ऐसा क्यों लग रहा है कि इतना तमाम कंसर्न्स हैं इसमें, इन्फ्लेशन को लेके भी है, तो क्या वाकई में आपको लगता है कि वाकई में ब्याज दर की कटौती करना जरूरी था इस वक्त? क्योंकि ऐसा लग रहा है कि अगस्त में जब ये पॉलिसी वापस एक बार आएगी तब शायद ब्याज दर में कटौती नहीं होगी. कहीं एक रूमर ये भी चल रहा था कि वित्त मंत्रालय को खुश करने के लिए पूरी कोशिश की जा रही है.
See, there's a no-win here. If I cut interest rates, it's because I want to please the government. If I don't cut interest rates, it's because I want to have a fight with the government. You got to make up your mind. This is no. Seriously, there is a misimpression that we want to keep interest rates really high because our primary sort of objective is to look really strong and firm. But there's no point in looking strong and firm if you kill the economy in the process. We want to do what is right given our mandate to keep inflation under control. So we are trying to use whatever room we have to undertake the actions that revive the economy. We are under no illusion that the economy, especially investment, is up and running. It is not, and it needs support. We also don't take the view that interest rates are the only thing that matter. There's so many other things that matter. It's one part of the overall picture. So all the entities that are involved in generating growth have to contribute, including the banks, including the industrialists, including the government. We are saying that we'll play as much of a part as we can. And in this case, we looked at all the data. We could have waited. But as I said, waiting would probably be a conservative strategy in this environment. We are moving forward, but we're not going to be reckless. We have to wait for data to give us more room if that happens going forward. And so now we are, as before, contingent on the data. And I would say every time we've moved, we've used the available room at that point. And similarly, we've used the available room. This move is no different from the previous moves. It awaits data now.
Should we check if there are questions outside?
Sure.
Inba, can you please check if there are questions outside?
Sure. Participants in the audio bridge, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We have a question from Manju Dalal of Thomson Reuters. Please go ahead. Yeah. Good afternoon, everyone. I have two questions. One is on the global rupee offshore bonds by Indian companies. Mr. Rajan, I wanted to know when would we expect these guidelines to be out? And the second one is, how is RBI viewing the impact of such issuances in future on the NDF market and its consequent impact on the Indian rupee? My second question is on the guidelines issued by the RBI on the cross-holding of the long-term bonds by banks for financing the infra and the affordable housing. I a little bit wanted to understand the rationale behind these caps and restrictions set by the RBI for on such issuances.
I'll talk about the second or the third question you asked and leave the first question to Mr. Khan. On the question about infra bonds, there was a request from the banks that yes, they could issue the bonds, but it would be great if they could trade them also. So they said we just need a small amount to be able to trade them. Of course, our whole intent is that the infra bonds should not be a backdoor way for the banks themselves to all hold it and not issue these bonds outside. The whole point was to encourage additional flows into the banking sector other than through the normal route of deposits via bonds to the infrastructure sector. That's why when they asked for some small limits, we gave them the small limits so as to ensure this doesn't become mutual financing. It's more a facility for them to trade and increase liquidity in the infrastructure bonds. On the first issue of the rupee bonds, perhaps Mr. Khan can respond.
On this rupee bond, we have drawn out the design features and we have sent to government for their views, and as soon as they communicate their views, you should be able to put out the guidelines. And so far as the NDA part is concerned, as you know, our approach has been to see that more and more hedging happens on onshore. That is why we have recently relaxed those currency future guidelines, and we will also facilitate overseas investors who have got exposure to Indian rupee to have access to the hedging market in India. That is our approach and we are working on that. And as Governor said, going forward we will also look at some further relaxations in the regulation to see that there are more reforms in the markets and there are more hedging products and there are more players.
Thank you, sir.
Yeah.
That's from Radhika Mervin of Hindu Business Line. Please go ahead.
Yeah, good afternoon, sir. I have two questions. One is on the capital requirement fund. We've been seeing a lot of public sector banks, raise money through the AT1 bond issues. How comfortable is the RBI, with the growing such issuances? Because it obviously increases, risk in the system. Because most of the banks are just about meeting their, CET requirements. That's one. The second part is on the currency front. How comfortable is the RBI? Will the fall in rupee also weigh on RBI's, future rate actions or their stance on the liquidity front?
answer the second one.
Okay. Let me ask Dr. Urjit Patel to answer the second question, then I'll turn to Mr. Mundra for the first question.
What is internalized in terms of policy action emanating from external developments is looking only at the headline inflation number, and therefore it's one of many factors that would go into this decision, and we would not be focusing on the external value or the volatility in the environment directly, but only indirectly through its feedback into the headline inflation rate.
See, as far as Tier 1 bonds are concerned, I don't know why this thought comes into the mind that it's creating more risk in the system. Tier 1 bond can be issued only to a certain extent. There is a correlation with the CET. It's not so that one can issue infinite amount of such bonds to raise the capital. Moreover, the structure of instrument is such that there are enough checks and balances are there. If you are indicating towards the cross holding in the bank, which can lead to this kind of risk, so those things are not permitted. It has to essentially comes from a different set of investors, and under the new instrument, the investors come knowing about the risk that if contingent upon a certain level of CET, these bonds can be put for loss absorption or conversion of equity. So I think I don't see any concern which should come on this count.
Okay, thanks Inba. We'll take two last questions from this room, Siddharth and Gayatri.
Hi, Siddharth from Cogensis. So a couple of proposals that are withdrawn by the government from the finance bill relating to the PDMA and the amendments to the 45U and W sections of the RBI Act. Was there any dialogue between the government and the RBI prior to the removal, especially with reference to the regulation of the gilt market? Because you had chaired a committee in 2008 suggesting that the gilt market regulation go to a unified regulator.
On the PDMA, I think both the finance minister and I are in complete agreement that there is a reasonable case to be made for an independent PDMA, which will be relatively small, which will run the front and middle office. That is currently or in the past been done by the RBI. In fact, the middle office is now largely sitting in the finance ministry. So I don't think that will create a huge disruption, etc. There's a broader agenda of moving a whole lot of other things away from the RBI, and I think we are agreed that that would not be wise without much deeper dialogue. As far as the regulation of the bond markets go, today exchange traded bonds, government or corporate, are already with SEBI. There is, there's somehow this misapprehension that it's not already being regulated by SEBI. What the RBI does regulate is over-the-counter trading, as it does in over-the-counter trading of options, for example, or currency products, etc. And given that, especially for short-term money market instruments, there's a much stronger link to monetary policy. It is important to consider whether those things, how those things are regulated, who regulates them, and where they lie. Sort of what is important, and this is something that I think there's complete agreement with the finance minister, is that what is functioning well doesn't need to be disrupted for some hypothetical gain. So let us make sure that we have a well laid out path based on tangible progress and tangible value before we sort of intervene based on some theory.
This is Gayatri here from ET. My one question was, given the level of disintermediation that is going on through the high level of CP issuances, like how does it play on your conduct of monetary policy and transmission?
Well, I think the
is
CP...
it an obstacle or is it a worry also?
No, I think the CP markets are helping.
They are not. They haven't had, because your 3 rate cuts hasn't effectively transmitted into rate cut by banks. So is this a reason?
No, I think that as the commercial paper market interest rates come down, firms are going directly to commercial paper, the ones that can access those markets, and thereby disintermediating banks, which is putting pressure on the banks to actually cut their rate. In fact, if you look, and this is some work that Michael Patra, RED, showed me, is that interest rates were coming down even before the first rate cut because of pressure from these other markets. So I have no doubt that over time competition will play a role, right? So banks will have to figure out, do they keep their margins right now and lose market share, or do they cut their margins and keep market share? That's an age-old problem that they will have to address.
Governor, if I can jump in on this similar topic, Subhashri.
Ask Kalpana.
So just one question on in the transmission, like you have been highlighting about the transmission. If you could take into consideration the biggest sovereign risk-free borrower, sir, he has not been able to borrow at a lower rate from the market, and the yields are at pre-RBI rate cut levels now. I wanted to understand, what do you think is the reason that even there where it is a market-determined rate, where it's not banks only, it's the insurer, a lot of other players are also playing. What is the reason that the transmission is not happening through that particular segment, and therefore how do we expect the banks to also cut rates from there on? Thanks. And do you think that booster rate cut would have been worked a bit? I mean, would have been a more effective way than a smaller rate cut?
So,
sorry, second question.
Everybody has 2 questions, including those who interject at the end without. Okay, I don't think you can argue that government bond yields haven't been coming down. They have come down. Today, 7.65, 66, whatever it is at right now, is way down since the 11 and 12s we saw at some point in 2013. So if you look over the longer period, they have been coming down. If you look over a 1 month, 2 month, there's so many factors. If you remember, our bond yields are also influenced by international yields. US bond yields have come up by 40, 50 basis points. From 1.6 now they're 2.2, 60 basis points. So that also plays a role in the yield differential. In fact, bonds are affected more than short-term rates. What was the second question? Do you remember? The RBI is not a cheerleader. There are other people in the economy who can play the role of the cheerleader. Our job is to give people confidence in the value of the rupee, in prospects of inflation, and having established that confidence, create the longer term framework for good decisions to be made. Every time an exporter comes to me and says, stability has been very valuable for us to make decisions, that reinforces my view that these are our main roles, not to act as, what was that you said, booster shots or cheerleaders. They're in competition. We'll see what comes first. I said by the end of August, I hope we will be in place to announce one set at least.
Thank you very much, sir.